Welcome to readtheticker.com. Richard Wyckoff not working for you? This may be why. You have not successfully judged a change of behaviour. A change of behaviour in all cases requires strong evidence to have an uptrend to go sideways, sideways to downtrend, downtrend to go sideways, or sideways to an uptrend. Change introduces to the opportunity of profit. However, Mr. Market will not release the profits to you very easily. The stock market is the finest wealth transferring tool ever invented. For you to be on the receiving end, your skill determining a Wyckoff change behaviour must be of the highest standard, along with risk management. Gathering evidence to confirm a change of behaviour is likely and will generate a trend will require to evaluate demand lines, supply lines, volume, price spread, climatic action, price tests, trading range, sectors, sister stocks in the broader market. Knowing the fundamentals does help, but it doesn't allow you to time the market or enter the market at low risk. Buying at the exact low or high is completely unrealistic ambition. For advanced thinking of how price patterns are built, we must consider Richard Ney logic. The professionals will do all they can to reach their volume targets, their own personal volume targets. They'll smash price up to release volume. They'll use time delay to force you giving up holding the position. They'll paint the chart to look attractive or even scary. They'll use bear traps, bull traps, and shakeouts and what have you. Only when the professionals have met their volume targets will the stock be moved to allow the professionals to profit from their price differential. The public, that is you, is simply cannon fodder. Therefore, while patterns build, it is a positive sign to see the professional tricks fall away, as you know they are nearly done, i.e. their volume targets are achieved, and a move is very close. Richard Wyckoff knew navigating a change of behaviour pattern successfully time after time required a game plan to recognise those patterns which best foretold a change was likely to be successful and allow the trade entry risk to be minimised. After all, not all change behaviour patterns are easy tradable. For example, V reversals. Here's a Richard Wyckoff accumulation pattern. It could be a double bottom, a triple bottom, some sort of saucer, a cup and handle, what have you. They're all the same nature. But it talks about a change of behaviour from going down to sideways, and a sideways to an uptrend, or what have you, or a sideways could be possibly a downtrend. And if you try to recognise, he tries to recognise phases within the pattern that signify that a change is going on. That's supply lines broken, that's downtrend trend lines. A supply line is not the same as a trend line. It's drawn from two specific supply points, same with demand points, to see where different levels of support and resistance are breached, and to see strength come in and watch the volume patterns. There's quite a lot to go on. So you get a change of behaviour here and a change of behaviour on exit. Richard Wyckoff knew that a change of behaviour is a difficult pattern to navigate, and he designed 9 tests to provide evidence that a change had been successful for buying. Here they are here. You can study these on your own time. The short answer to the story is this. Any change will mean money. Significant change means significant money. A new director, a new CEO, a new product, a new discovery, a change in law can create change that will generate a change in price or fortune for a stock. However, the all-powerful professionals know this, and they are the house. They will do all they can to ensure the tradable volume is secured by priority players, i.e. themselves, before any move is on to ensure they profit the most. Become skillful in managing change and risk to piggyback on the back of the professional so you can enjoy their profits. This is the point of understanding Richard Wyckoff and Richard Ney logic, as they have studied this market before and worked out a game plan and the hurdles to overcome to enjoy the ride on the back of professionals. One final note. Successful management of change of behaviour is critical. The other topics of the Richard Wyckoff Not Working series are all part of the process. Part 1, wider analysis of sectors and sister stocks. Part 2, position sizing and relative to the entry zone. Part 3, trying to select the Wyckoff friendly cause and effect stocks. Part 4, avoid the crazy ones, the stocks that aren't supported, that have crazy spikes and don't really hold any form of support and resistance. Thanks for watching.